Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Monday, September 16th. Today, in terms of economic data, we only got New York Empire State Manufacturing Index, which surprised to the upside with 11.5%. We were on the negative in the previous one, and we were expecting also negative. So manufacturing is skyrocketing higher, and that would mean most probably bullish on the economy. But we are ahead of Wednesday's FOMC, and there are certain things that are affecting the market in a negative way. The first thing is that Apple is just sliding 3% in the red because the demand for the iPhone 16 and most specifically for the iPhone 16 Pro, it's pretty low. So Apple is just, we are seeing how JP Morgan and Bank of America are analyzing the first numbers on the demand on the reservations, and I think they are seeing pretty low demand. That coupled with the fact that there's a lot of analysts now pricing in the 50 basis points, and I think that's pretty bad for the markets because we are playing lag behind the inflation. If the Fed cuts 50 basis points, I've mentioned that in a lot of videos in the past, that would send a signal of a rush of weak economy. So Fed needs to support, to step in, and the markets will certainly feel that. And we are seeing again a jump from 60% last week on the 25 basis points to now 60% on the 50 basis points. And that's really, really affecting how the markets are playing today. This is the 15-minute chart. And as you can see, the first thing that I would like to see, I told you in my weekly recap video, is that basically I want to see this zone being held. Now we are kind of holding, but the price action right now is pretty damn choppy. During the overnight, I just saw the overnight being taken and then continuation lower until we basically took Friday's low and then more. So basically, where are we in terms of price action is just on the if this fair value gap, let me just put it on the 1 hour. So basically, this is a daily fair value gap that we are building right now. This is the fair value gap. If you put quadrants and the consequent encroachment that you can see right here, we can see that we've been struggling to hold that. During the open, we just took pre-market lows, respected this inverse fair value gap right here on the 1 minute, and then tanked. We did a nice order block here into a dump lower, and then we tried to hold with a fair value gap in the consequent encroachment of that daily fair value gap. That would have been a nice entry, but if you check my setup, this is a 33 risk trade. I don't usually trade 30 points of risk. I like to be on the 20s, on the 20s, on the low 20s, or even 15s. So I didn't take that trade. We put an order block, we ran through the inverse, and then we took the high of day here. And look at this chop. Look at that chop. That's why you certainly cannot trust that move, because then in a 5-minute fair value gap, we just left the buy side liquidity intact, and then we dumped again into low of day, and we are basically trying to find some bottom. Now, things that I've been watching is this 15-minute order block right here with the week that, let me just put on the 1 minute, 5 minute, it was the 5 minute, yeah, that was the week. This week held the 50% consequent encroachment and the order block. So we are somehow trying to find some buyers. There are certain fair value gaps that are being respected, but I tried 2 times in this bounce right here, this bounce, I took this candle with the low of that. So 17 points of risk. That's one of my risk parameters. And then I was watching for 71 points into this buy side liquidity. I saw it struggling in the inverse. So I put in here right below the fair value gap my stop, and I stopped out on 23 points. So basically a 1.37 risk reward ratio. So I stopped out. I looked for another opportunity. This one right here looked pretty decent. So I waited for the bounce and I took the same setup. This candle into 17 points again, and then I didn't want to have that kind of a target aggressive. I just wanted to scalp, and I took 32 points plus 20 from here, so almost 60 points, more than 1,000 bucks. It's pretty awesome for today's price action. Look at this. This is super difficult to trade. So if you are green, just take that money and run, because the markets are super choppy. Apple is still 3% in the red today. Nvidia is also 2%. Small caps are pretty weak. The RSP is trying to build some momentum. Look at this. These are the indicators that rotation is putting out of effort into small caps. And at the same time, the Nasdaq is almost all red. So one last thing, today is the last day that I'm going to trade this NQU September contract. We are moving into NQ SED December contract, because today is the first day in which I saw more volume in the December contract than in the September contract. So if you are trading futures, take that into account for tomorrow. We are going to see a lot of interest being moved from NQU to NQZ. So take that into account. Tomorrow, I will be trading NQZ. And NQZ December contract, it's 300 points premium from the September contract. And that would be quite an important nuance. So today, in the overall picture, we are just chopping. The 15-minute is not expressing, is not telling you any narrative. We are just being rejected here. Maybe we can attack 400, but I don't know, guys. I'm just seeing in the macro that we are right now in 1 p.m. Look at these lows. These lows never were taken. So I wouldn't mind to just basically a Judas swing into the lows and then build the final push. I will be watching that with an alert down here, but this is pretty difficult price actions. Don't ruin your week just on Monday. Be patient, be disciplined, and try to find better opportunities in the rest of the week. It's just Monday, and Wednesday is FOMC. So that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that discipline, patience, and risk management are key for your success. Stay safe, everyone, and see you tomorrow.